Hello traders, and welcome to another video review. Today is January 30th 2025. Let's take a look what do we have on the Forex calendar. We are going to choose important and medium important data releases for today. As we already know, let me just mark it here. As we already know, yesterday there was an interest rate decision by Fed. They decided to leave the interest rate at the level of 4.50. So most important event of the even week and the month had been done. Now we are just looking what can we have in the market today. NIZ, business confidence in New Zealand, way lower than the previous number of 62.3 with the actual number of 54.4. We are looking for the French GDP, which is way lower than expected. We are looking at the COF leading indicators from Switzerland. Last reading 99.6, forecast 100.3, actual number 101.6. Very nice. Spanish CPI 3% beats the expectations. German GDP is the latest data that we are waiting for. This data is scheduled for at 10 o'clock, and 1 hour later we got the GDP for the whole Eurozone and the unemployment rate as well. Then what do we have? The speech from the German BUA President Joachim Nagel at 12:30, and we are now smoothly going towards the London session. ECB interest rate decision is scheduled for release at 2:15 together with the deposit facility rate, marginal lending facility and monetary policy statement. The GDP from the US is scheduled for release at 2:30 together with the initial jobless claims, and 15 minutes later we will start the ECB press conference. Pending home sales from the US are scheduled for release at 4 o'clock. Then we have, of course, the Fed's balance sheet, and this balance sheet is scheduled for release at 10:30. So very easy day for today. For the volatility traders, for the momentum traders, plenty of the data releases, including a potential cut from the ECB from 3.15 to 2.90. I wonder if they will cut this interest rate. Fed kept the interest rate yesterday. We will see what the ECB will do today. Because there is a lot to talk about, let's just switch to the chart, and we start with, of course, euro-dollar. So the euro-dollar 4-hour chart from yesterday just dipped lower towards the level of 1.0383 and then bounced back up, and it's back right in the little consolidation here. So it looks like there was no big deal for the bears, no big deal for the bulls on the euro dollar, regardless the yesterday's Fed. Let me just make this level a little bit more visible. 1.0534 is the recent swing high and the technical resistance. We broke below this demand zone, which means that it doesn't actually the market doesn't actually pay that much attention to it. And because the price is lower, let me just for the last time change the color of this zone to red. The reason for that is that because it used to be a supply zone, then after the breakout we have the demand zone, and now it's a supply zone yet again. Yeah, we got the breakout, then so it was a demand zone, we got a bounce from this zone, then we have a breakout lower. Now this zone here is the again supply zone again, and the market participants, let me just play this line here, might be of course in waiting mode for the ECB, and if this yesterday low at 1.0389 is violated, then the next target is 1.0356. This is 100 periods moving average. Momentum, as you can see, just dipped towards the level of 40, bounced right back up. Now we got at the level of 48 points, roughly just below the neutral level. So nothing is going on. Boring chart as the market awaited the interest rate decision from ECB. USD, Japanese yen. What is going on here? You see this line? We have a test. Let me just switch to the daily time frame chart so you can see the test. There you go. We have this very nice, I guess, very nice trend line here. One point of support, then the second point of support, bounce, and now it looks like the market wants to break below this line in order to penetrate the lower levels there. local swing low is now located at 153.73. So as long as we trade above this level, the outlook remains sideways. It's not bullish outlook at all, because in order to do this, we need to break back above the trend line and back above at least 155.99 to test this zone here, or at least the 100 periods moving average. Otherwise, the outlook still remains bearish. This looks like the distribution pattern on the US dollar to the Japanese yen. No big deal here. We should be prepared for more weakness coming into US dollar and Japanese yen markets. How the SP 500 reacted to the ECB, to the Fed. ECB is today. We got initially some sort of the weakness coming to the market, then long lower shadow, green candle, green candle, green candle, and this candle is back green again with the momentum at the level of 56 points. So as we expected, the market is still moving higher, and it's still narrowing towards the level of 6,000, and this is 6,000, I guess 100, yes, 6,095 points. So this level here, 6,002, and this level here, 6,020, is now the technical support, and the outlook remains bullish with positive momentum. Maybe not that strong, but still positive momentum that should move back above the level of 60 soon, and we should see the test of 6,126 yet again on the S&P 500. One more level, one more market that we want to take a look at is gold market, because the gold keeps moving higher right now. $2,771 per ounce of gold. We are getting closer to the level of 2,785, which is the swing high, and if we zoom out, you can clearly see it is very, very close to the all-time high at 2,789. Okay, so this is very nice. Let me just zoom in. This is very nice uptrend, right? The clear pattern here: higher highs, higher lows, higher highs, higher lows. So this is the first lower low, but that's a pullback from the extremely overbought conditions, and now upward we go. Momentum 61 points, pointing to the upside. Room to the upside here, room to the upside here. Please please expect the gold market to break the last swing high at 2,785 and test the 2,789 level soon. And last but not least, the Bitcoin keeps moving higher. This 4-hour time frame chart is showing us the black trend line. You can see it here, and this black trend line, let me just get rid of that. Here you go. This black trend line was tested at least twice, and now we have some kind of a breakout here. What do we need to do? Is we need to break above $107,068 in order to confirm the breakout above the black trend line. With this kind of momentum, 60 points, it is clearly possible. There's room to the upside here. There is room to the upside here. Of course, those are the levels where the Bitcoin will be extremely overbought, because this is the all-time high level, right? But after the movement to the downside, after the sell-off that was made out on January 27, there is no trace whatsoever. There is absolute 100% retracement of this move, sell-off to the downside, and now the market continues to gain the momentum and continues to move higher. So please expect higher levels on Bitcoin, lower levels on US dollar to the Japanese yen, higher levels on gold, higher levels on S&P 500, and possibly please await the possible reaction for the euro dollar, because we still don't know how this market will react on the ECB interest rate decision. Please remember, ECB is expected to cut the interest rate from 3.15% to 2.90%. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.